All right. Hey there, Sam. With you on Friday, January 5th. We're mid morning. And I had a request to take a look at STEAM from one of my members, and I thought we might have some things we could learn here. So this is STEAM to Bitcoin on Bittrex. This is the 2-hour chart. And just, as I like to do, I'll take you over here to CoinGecko. You can see this is a major project. Most of you are probably familiar with STEAM. We're at 60 on their score, and I tell you to be at 50 or higher, market cap of 1.5 billion. So this is a major project, of course. It's almost all traded against Bitcoin, and the bulk of that is on Bittrex. So given that, we'll come back over here and look at it here. Now, I've got the 2-hour here, so this is just a reminder. Sometimes I take things for granted. When you first pull up a chart like that and you look at the 2-hour, you think, wow, this thing is, we're really moving. But let's, keep some perspective. Let's go back to the daily. Okay, so there you go. So now you put that with that move in some perspective, and you can see here relative to the potential upside, if we're going to go back up and visit those highs. Well, we got a long way to go. So looking at this now in this context, perhaps this is just a one wave. We made an attempt. You can actually see here, if I were to open that up, you can see there's a 5-wave sequence here that ends up failing. So not the first time we've made this kind of break. Let's see, maybe we can hold it here. Let's go. I'm going to go back to the 2-hour here and get a look at this. So after that long sell-off, all I've done here is just wick off the lowest low. So when I first look at this, this is one where it's fairly obvious to the eye. So if I were to just grab my, just off of the first look at it, well, you can see we get a 3, 4, 5 here. So I would label it this way. So we'd have a 1. Here's our 2. I'm going to check that 3, 4, and 5. That looks to me like a completed one wave. I don't love how abrupt the 4 is relative to the 2 or the time. The symmetry of the time here is a little askew, so it makes me want to check that. So what I would do is I'd look at this and say, well, what's the probability that my third is here? So if I look at that, I go, okay, well that makes sense. Here's the high probability zone for my third relative to the length of the 1. Here's the 1618 175 window, and we go, the body holds right within it. We get a little pump on the wick, but then we come down. So this seems reasonable, right? So because the other alternative, if you're trying to get a better sense of symmetry, the other alternative would be this, that we had this. This actually looks to the eye a little bit better, but now we're, how do we account for that? Then we'd have to label that, this is kind of the, the process you have to go through, because that certainly could play as potentially. Let me change that color so it makes more sense, and then we would put this in. Pardon me. I'll put it in a larger degree so we're not in the same degree there. So, from the symmetry of the length of the 1 relative to the 2, length of the 3, it's not that doesn't work. I mean, certainly, but now if we do that same process and we look at the relative relationship here, so we go length of the 1 from the 2, right? It doesn't work. I mean, we're way beyond. So it remains to be seen. So why does that matter? So, of course, this is the pivot that matters to us. If we're coming out of this in a one wave, are we going to go in an impulsive wave, or are we going to come out of this with a leading diagonal? Well, that remains to be seen, because it's a question of whether or not we're retracing a completed 5-wave sequence or we're just putting in the 4. You see the difference? So, this I would propose to you based on looking at those fib relationships, because this has higher probability, that this is our 3-4. We've completed the one wave. That's how I see that, which means that now, given I've got a completed 5-wave structure, I'm retracing the entire move. So I'm looking for those the probability zone for my second. So if I put this now to put it into the appropriate degree, so I'd go back here, and then from my low here I get a 1. I'm in the process of putting in a 2, and then I'm going to go up for my 3, 4, 5. Hopefully, if you're a bull. So let's put that in a different color, and let's go up a degree or two just to have it make sense. Okay, so on the assumption that this is a one wave, now we're looking for the second, and we know the highest probability zone for our second is between the 50 and the 618. Well, this is interesting. We know algos will be buyers at the 50, and you can see we're getting a little reaction here. We got the Vegas wave just below us, but what I don't like of this is I'm going to go down to the 1 hour. So the only thing not to love here is that this is a straight shot down. So that, given the length of time here of this on the assumption that we have a one wave in, I would be looking for more subdivision. So for me, I would anticipate that we're doing something like this. We're going to go up, put in a B, and where the C wave comes in, that remains to be seen. But this straight shot down, that's typically the A wave reaction. So this is correcting all of this. Now we're spread to Bitcoin. Bitcoin's having a big day, and so this doesn't surprise me that we're getting this kind of reaction here. So it becomes a question of now, you can make a case here that if you're not applying Elliott wave, that you could just be a buyer here off the 50. You got the 233 right here. You got a straight algo pull. So it's not that couldn't be a profitable trade. I would just tell you from an Elliott perspective, we're incomplete. So that doesn't mean that you couldn't make money here, and I'm not saying don't take a long here, but recognize that likely all you're going to do is put in a B wave. So again, nothing wrong with that trade, right? So depending on your size, so you'd be taking it here at the 50 with a stop under the 65, because here's our wave one high, likely some structural support. So that's not an unreasonable trade there by any means, right? So here's the algo target. Here's the 65 would be on the other side of that. We're getting the reaction that you'd anticipate, right? That's commonly seen at the 50. Now, if that holds, well, we don't know. But, if you're looking to get positioned for something here a bit longer term, and, this isn't enough for you, so let's look at that, right? So if it's going to be, let's say we come down here and we've got to look at that, and we would anticipate knowing that a B wave can go anywhere from the 50 to the 786. So let's draw it up and say, well, does that make sense? Do I want to be a buyer there? Well, if we were to go all the way to the 786, so now what have I got? I've got 2.2 to 1. If I'm going to trade it, per the range here that would make sense. So a stop on the other side of the 65. Again, even knowing that a 2 can go as low as the 786, I wouldn't give it that much. And interestingly, note here that the negative 23.6 of the fib from the swing high to the low here, if we're to go up here and we put in a B, then we get a perfect confluence here at the 618. If 2 to 1 is good for you, again, nothing says that it must turn there and then go back down. It could just rip right up here. That's it's a matter of playing the odds. So the expectation would be, given the length of that we get one more move down, and that we put in a more complete correction, giving us the 3 waves that we look for to increase our probability, to increase our odds, giving the pattern and the price structure that we would look for to correct this one wave, right? We trend in 5s, we correct in 3s. So this is each trader's call. If that 2 to 1 or 2.3 to 1 is enough for you, and knowing that it could keep going, well, then by all means have at it. For me, I would wait. I would not take that, because that 2 to 1 isn't good enough for me. 3 to 1, I would say is pretty much a minimum for me. I'm looking for a minimum of 3 to 1 anytime I'm going to put capital at risk in the market. So my expectation is here that we're in the process of this stability here. We're putting in the A wave low. So now we got to deal with the fibs coming back up, and again, it remains to be seen whether or not that holds. But right now, that looks like what's happening there. So now we would anticipate into the B. Remember, we correct in 3, so we'd be anticipating something along these lines. And let me take it down so it makes sense. I'll put it in a different color, and I'll put the wave on it. So just so you get the idea. Okay, so it's always a function of where is the trend. So think of it this way, all right? We've had a 5-wave trend up into the 1. So a 5-wave impulsive move into the 1-wave. We are now correcting that in an ABC. So the dominant trend, the long-term trend, is higher based off of this 5-wave structure. But we're now going through the corrective process. So in the correction, now the trend is down. So we're correcting this in 3 waves. So this, likely, if I went down to a 15-minute, I could find a 5-wave structure there. I mean, these are shallow, but you can see here's the 2, likely the 4 right here, and then we push down for the 5. Again, on the assumption that that holds. So this 3-wave here is correcting this 5-wave. I know that this can get confusing, if it's new to you. So your anticipation is, and the way you would identify a completed B wave here is with a 3-wave structure that then turns and starts to head back down. Now, if we come back down for the C, and we look at that in a larger degree, now let me just to make the example easier on your eye. See, now what we're anticipating is that we get a 3-wave structure here of a larger degree to correct the 5 waves up into the 1. So even though we have the short-term trend is down and this little 3-wave is correcting this, the longer-term correction is the 3 waves correcting the larger 5. And it sounds crazy when you say it out loud, but if you look at it, it should start to make sense for you. We're correcting the 5 in a 3, but within the 3, there could very well be a 5-3-5. That would be your classic zigzag. So it's a matter of getting your mind around this, and this just comes from experience and seeing it and studying. And looking back through many case examples. It's not a bad idea to go back through charts and just see if you can find the 5s and 3s. Right? Just get your eye attuned to looking for it. So here, this is the anticipation. So is there a trade there now? Not for me. Some might take this, but again, the risk reward is not good enough for me. So I'm going to wait for this to complete. Now, knowing that that's potentially my roadmap, this gives me the potential. Again, I'm hypothetical here, to do something like this. So if that's my low, then I come up for the B wave. Well, then this sets up for me a potential pivot down here with a tap of the median line. Again, it's a question of when does it get there. Are we going up and then straight down? Well, it remains to be seen. We don't know if we get there. That's the textbook. That's the one. If you get that, you take that all day because your risk reward is so good there. That's what you hope. Every time you start a correction, that's what you're hoping to see. Market doesn't always cooperate, but that's the ideal setup where you get massive confluence here. So note here, again, this will be interesting to see if we get there. If that kind of thing unfolds, well, this is a must buy. So look at the level of confluence here. And again, I know this is hypothetical, but it's called waiting for your trade. Wait for the trade that you can take with confidence. You're not going to lose sleep over it. You're not going to risk blowing up your account because of the risk reward scenario. This is the one you wait for. So look at the confluence here. So I would have a completed ABC. I would have the median line. I would have the pattern of the correction of the 1 at the 61865 box, the entries, the hot box that we love. I'd have the algo negative 23.6 target from this pull, assuming we get up here. So I have 5 different things in confluence here for an entry there with, again, hypothetical, with this kind of, so just first target. Up here, there's the negative 23.6 of the larger degree. So I can go into that. There's 11.5 to 1. Now, why would I want to screw around with a 2 to 1 here when I can wait? And again, don't know that it comes, but this is the one I'll wait for. I'll wait for the 11.5 to 1. And that's just the first target. That's not putting it in the context of where we could be going, where this third would be, remember the high probability zone for a third is 1.618, the length of the 1. So that third, that potential third, right? It's always just potential. That potential third is way beyond 11 to 1. That's easily 20 to 1. So I'll wait for that. If it doesn't show up, I keep looking. I look for my trade. I'm always looking for confluence. Can I find that kind of confluence with that kind of risk reward? And if I can't, I keep looking. I've lost track of how many coins we have now. Major coins, I mean, certainly over 1,000. I mean, half the problem is making a decision about where to allocate your capital. You can't take them all. So be selective about where you put your capital at risk, and make sure you've got a risk reward that's favorable to you. And if you're going to park some money there, that you anticipate that the risk is worth it, and that the reward warrants you parking some money there. That's the one I wait for. That's no hesitation there. I don't even hesitate. If I see that, it's instantaneous buy. So we shall see where this goes, but right now it's just in process, just under development. So on the watch list. So first thing I would do is I'd start putting alarms here at the 50 and the 618. I want to be alerted, when we get up there. What kind of structure are we seeing when we get there? And if we start to head back down, well then I definitely going to want alarms on the way down so that I don't miss something that sets up perfectly like that. So there's great potential there. We'll see if it unfolds. Okay, guys, there's 15 minutes. I'll wrap it there.